Hello and welcome, viewers, to another episode of Latoken VCTV. Today, we are going to discuss about unicorns, how to build a $1 billion company. So, starting a startup is if starting a startup is a milestone, taking it from the startup side to a running business model and getting revenue from it is another milestone to be achieved. And while in this process there are a lot of ups and downs and a lot of hurdles that a startup and its founders and its team members face, while solving the challenges they overcome it and try to become the unicorn. So let's know the know-hows and what to do's and the key metrics that are required from our esteemed panel, that is Tushar Kansal from New Delhi, India. So Tushar, hello and welcome to the show.
Hi Amit, hi Abilbek, hi everyone in the background at La Token VCTV. It's my pleasure to be back again discussing such a beautiful topic, and as always, lovely moderation by Amit. So thank you so much for welcoming me to the show today.
Thank you, Tushar, for that. So let's directly jump into the topic for today's discussion. But before that, Tushar, if a warm introduction about yourself and the kind of work that you have done so far. You have been on to Latoken so many times. We keep on asking you these questions, but again, since it is a general rule, we want to know more about you. More and more viewers are joining with us on every day. So yes, Tushar.
Thank you. So Amit, myself Tushar Kansal from Consultancy Ventures. Uh, I've been managing Consultancy Ventures. It's my baby since the last 7 years. And in these 7 years, have been fortunate enough to be a part of global ecosystem. Have met more than 3,500 startups, have relationships with over 600 investors, including private equity funds, venture capital funds, family offices, angel investors, institutional corporate investors, and I'm also an investor in 4 companies, and I handhold startups in a variety of ways, in terms of getting them funding, in getting them the right consulting, the right mentoring, and also getting them business. My personal background has been working with private equity practice at Deloitte and Touche, the Big Four. Also been part of the team at Brand Capital, which invested $100 million across companies, and was heading treasury at MTS India, the Russian telecom company, where I raised almost $2.5 billion for the company. And last, I was CFO with a company owned by Guggenheim Partners, the American PE fund. Look forward to a rich discussion today on this beautiful topic.
Thank you, Tushar. That was a great introduction by you. So let's move on to the topic. Let's start with what is a unicorn and how are this $1 billion are evaluated. Let's start with a brief introduction about this.
So any company which has a valuation of more than $1 billion is called a unicorn. So unicorn is a single horn horse, in the from the mythical times in Greek and literature and Roman literature, and it has got the fancy of the young guns who want to create huge startups. And matter of fact, in just 9 years ago, there were only 4 unicorns in existence, and today we have 226 companies which belong to this exclusive club. And together, these companies account for a total value of more than $700 billion. And less than 2% of the startups achieve a $1 billion valuation. But an increasing number of tech startup founders have set their sights on this lofty benchmark. And unicorns can be found in US, China, United Kingdom, Germany, South Korea, and it has got the fancy. So basically, although the valuation is what is counted for, but typically any company which is reaching a unicorn status has done something which is not done by other companies. So from an aspirational perspective, there is very amazing success stories behind these unicorns.
Great, great, Tushar. So, does it mean that they solve a fundamental problem, a fundamental existing problem that is there, and they since they solve the problem, they try to create a market out of it, and they create and after creating, they generate the revenue. Are only these type of startups can become unicorn, or existing business model which are already present, but again on changing them slightly at a time, but having a high growth rate can also lead a startup to a unicorn stage.
So, Amit, unicorns were born earlier also when we were children. We were so young. But, this kind of media which is there today, Shark Tanks and VCTV, and, this kind of media didn't exist. And what has happened is that, like we had companies like Unilever, Procter and Gamble, General Electric, and in India we had the Tatas, Reliance. In the UK we had Unilever, and in the tech companies, Microsoft was an early starter, and so all these companies have been there on the horizon since a long time. But the dizzying valuations which have been achieved by recent unicorns is what attracts a lot of people to start on their own. Uh, when you talk about business model, what has happened is that earlier we used to talk about setting up asset heavy businesses. So factory, like GE operates wind turbines, it operates aeroplane engines, it has MRI machines, it has nuclear technology. So people used to think in these terms, which is kind of a hardware kind, asset heavy kind of business. But nowadays, people look at Uber, people look at Airbnb, they look at all these platforms or aggregators which are tech heavy, which use artificial intelligence, and their aspiration is to become an asset light aggregator and generate business, and you be the go-to platform for achieving some particular task and become viral, scale to such an extent that millions of people are using you. And since millions suppliers, millions of buyers are already there on your platform, so it is not easy to get away from your platform. And that is a moat which companies have built around them, and they become, so to say, de facto monopolies. And it's difficult to then for new companies to start a business without participating in your platform. And also the advent of the smartphone, which has become a very sticky product, and all the businesses are being built around the smartphone. And the ease of getting products, getting services at a fast time, at a good quality, with proper ratings and assessment system. So all these factors have led to a plethora of unicorns on the horizon.
Okay, Tushar. So the next question follows your previous explanation, which brings me to ask that do this startup have to only be asset light, or can they also be asset heavy? And why do what is the sentiment of the investors when a existing business model is asset heavy? For example, I want to give is an agri-tech platforms, like people who do agriculture, vertical farming, or aquaponics or hydroponics. They need to have lands, they need to have some kind of setup initially to actually start the business. So what is the investor sentiment around these kind of businesses?
So, Amit, what has happened is that on the investment side, let us talk about the availability of dollars. If you look at from the time of 1990s, when the dot-com boom and bust happened, since that time, the availability of dollars, the availability of money to invest has exploded, and this money is chasing returns. And if you put your money in a US bank or a European bank or a Japanese bank, you hardly get any return. Which is like the safest kind of investment, but with hardly any return. And if you put this money in commodities, or in fancy derivatives, if you play around with this money, you need a lot of expertise. So you ride on to other vehicles who provide you a return, like mutual funds, hedge funds, and there comes the role of a venture capital fund. A venture capital fund has a small lean team. They typically take a carry for the effort they do by identifying unlisted private companies to invest in. Typically, they take 2% and 20%. So the total assets, the total money which they manage, they take 2% every year. It can be less also, 1.5% every year also, for managing their offices and salaries. And they take 20% of the capital gains they make on exit of an investment, the return. 20% of that they distribute within the teams. So, if you are an investor and you are investing in stock markets, you are investing in commodities, you are investing across asset classes, then it is difficult for you to ignore the investment in a startup. And if you are busy, you might be a CXO or a mid manager in a multinational company. You don't have time to evaluate startups, or probably to build a good domain knowledge about agriculture, agri-tech, about fintech. Then you rely on third-party vehicles like venture capital funds. Just put your money in the hands of good investment managers. They will manage the show. They will put money. But you should know that when you are putting money in an unlisted startup, venture fund, then the returns will come in 5 years, 6 years, 7, 8 years. I've seen investors putting money even for 10 years. And but the kind of return which this money will generate will surely be something which is not very easy to achieve in a normal kind of investment. When you talk about agri-tech, yes, earlier we used to have asset-heavy businesses because people used to feel that their money is safe, because in whichever company they're investing, it has an asset to back. And end of the day, that asset will be there as a security. But today the asset is data. Today the asset is the number of subscribers, and things are totally different as of date. The total, if you talk about e-commerce companies, then apart from turnover, they talk about GMV, gross merchandise value. That is the total value of goods and services which got traded over their platform. And they made only like a portion of that, a percentage of that, maybe 3%, 4%, 5%. But the metric they use to showcase the power of their platform is GMV. And if it is a services-led business, the term which they use is GTV, gross transaction value. And so these fancy terms to define the kind of business your company is enabling, also leads to different kind of ratios through which investors generally try to value a particular technology company.
Great, Tushar. That was a very technical explanation of things. So moving to the next side of the things, Tushar, what kind of investment have you done so far in the recent times, in the 1 or 2 years, and which has the potential to reach a $1 billion mark? Any such kind of investments?
I am a reluctant investor. I have a disclosure here that I'm an investor in 4 companies. One I exited some time back, in fact, some years back, and 3 are still, but 2 of them are still in a very nascent stage. I'll be happy to talk about a lot of technologies which are futuristic technologies. So I've been seeing a company which is trying to convert carbon to oxygen, and that kind of energy company, if it goes on to create a successful product around it, a successful business around it, nothing like that. People say that environmental causes, social causes, corporate governance causes, all these are impact causes, and a lot of money is chasing impact. But matter of fact, the that impact which the company is making should have a business case around it also, for the investor to make a return. So sometimes what happens is that we talk about impact companies, but the returns, come generally lesser than non-impact companies. So there is this company which has created a way to for bottom of the pyramid population to do banking on feature phones, which are like not smartphones, and feature phones without an internet. So that company has created a technology. That technology is still in testing stage, and around 200 million people in India only are devoid of banking on the smartphone, on the mobile phone. And that company, I have great hopes for that they will go ahead and build something beautiful. Then on the social media side, uh, there is a company which is using big data and artificial intelligence. So if you are a user of that social media company, basically whatever you want, you can easily get it by the use of artificial intelligence. So just like nowadays advertisements are targeted, and Google has mapped almost 80% of the world population. Google, Facebook, Insta, and Amazon and Netflix, they have mapped 80% of the world population on 700 parameters, and so they are able to provide targeted and personalized options and alternatives. So just like that, this company is also crunching user data, but crunching it in a huge way, and hence it will be in a position to provide products and services over its social media platform. And I think it will be very successful in the future to come.
Great, Tushar. Great example. So moving on to the international. Uh, yeah. So moving on
Sorry.
to the. Sorry, I was able to hear your voice. No issues. So moving on to the international scenarios. Uh, what so many of the startups are getting listed on the international exchanges like Nasdaq, and they are taking an alternative path of SPACs. So can you brief us about what kind of scenario is this? It is recently gaining momentum. So what kind of SPACs are those, and how is it helpful for the startup to accelerate itself to get listed?
Okay, thanks, Amit. Uh, so SPACs are basically open kind of vehicles. So what has happened is a company is chasing venture capital, right? It wants to get liquidity on the balance sheet by getting its shares a value, and on the other hand, investors are chasing startups, the right kind of startup. So, in many cases, what happens is that the startups are finding it difficult to get a good valuation and get liquidity in its shares. And very some smart minds have defined a way. They have found a way of creating SPACs, and SPACs are basically acquisition companies which are pre-listed on the stock exchange. So how it works is that a SPAC gets listed on the stock exchange. It raises money, and after raising money, it goes out, buys a, puts that money in a unlisted company, and by default, because a listed vehicle which raised money put that money into an unlisted company and merged with it. So the unlisted company by default becomes listed on the exchange, and the units of that particular SPAC start getting traded. And it's a very smart way of marrying the easy money available on the stock exchanges like Nasdaq and NYSE, and the Chinese exchanges and Singapore exchange and the Indian BSE and NSE, and getting that money through to the right acquisition target, and in the process getting a good listed company available to the stock exchange. So the main part is that what happens is sometimes the companies, they are looking to do an IPO, but when they want to do an IPO, they have to go through a lot of regulations of the of the stock market entity of like SEBI in India and Fed in the US. SPACs already have done most of the compliances, and they have raised money from the exchange. So the process becomes quite simple as compared to a normal IPO route, and that's how they are able to uh, create liquidity in unlisted companies.
Thanks, Tushar. Now, taking a step back, for example, a company has just yet started. So, what are the key steps and key metrics that it has to keep in mind in order to reach that lofty goal of unicorn? Can you brief us about those steps?
So, I don't think that a lot of companies, when they start out, they would really believe that one day they can, become a unicorn. But it's a case of doing the right things in the right manner every day. And so the first step which a company can do to become a tech unicorn is to commit to rapid growth, and be extraordinarily driven to create something disruptive. That you just like my favorite example here is again Uber or Airbnb. So investors, whenever they looked at hospitality companies, they looked at these big 5-star hotels, 7-star hotels, creating exclusive properties. And Airbnb thought that what about the common traveler, and getting, and a lot of people have homes, they want to earn out of those homes. So they married the user and the supplier. So and created a technology platform which enabled easy access of these holiday places to the common traveler. So you have to commit to rapid growth. You have to prioritize your company's missions, values, and culture, and your team should firmly believe that your products or service will radically improve users' lives. And after the WeWork debacle, the IPO debacle, investors have become very sensitive to unit economics, which means that profitability should not take a hit in your quest for market reach. So have a revenue-based business model that draws profit from day one. And Airbnb did that. It kept commissions, right since initial days. It might have done some freemium model initially, but it has always been profitable. Then the second part is build the right product. If your goal is to build $1 billion company, a good idea isn't good enough. Your product or service must also be highly desired by a huge market segment. And there is a research which says that 42% of startups fail because there was no market need. And having no market need is the biggest factor which for failure of a startup. So how do you know that your idea has a unicorn level market potential? The first step is, after your proof of concept and minimum viable product, achieve product market fit. And if you achieve PMF, then you have tested and tuned your product and service with these. Then, if there is a lot of excitement around your product or service, and consumers are willing to pay top dollar for your product and service, then it's a good enough proof that your idea has a unicorn level potential. Then you should achieve scalability, manufacture and produce the product and service in volume, and service a large global market. So, the total addressable market, TAM. If your TAM is small, then how will you achieve your revenue numbers, and how will those numbers translate into a unicorn valuation? So, you should be targeting a big market and preferably a global market. So, if you achieve product market fit in a one particular geography, you should plug and play the whole theme across different markets and be a global company. Then the team is very important. You should have a winning team of industry leading experts. And if your product and service, it is disruptive, if there is no one else who's doing what you are doing, so that is a test of whether your product and service is disruptive. Thirdly, this is where role of people like me come in. Secure the right investment, and focus on always always analyze your business, track financial metrics, focus on the top users. What are the power users of my product and service doing, and what do they want, and how can I provide a better experience and a better product to them at a less time and on easier terms. And a lot of data crunching is required, so you should have a proper financial team as well who takes care of the numbers. And lastly, I feel that you should be very clear about the markets which will take you to unicorn status. So not, for example, if you are creating a dine out kind of business in Japan or ASEAN countries, and you feel that the same dine out model can work in India, it's not necessarily so, because you might have to tweak. If you want to tweak it, then you have to also know the time at which you will launch that particular version in India. Because in India, a lot of people, families, they like to cook, eat home cooked food, and that is not the same with Japan, with ASEAN countries, with US, UK, and I feel that any idea which has gone on to capture the world, to rule the world, is actually very simple. So, a simple solution to an existing problem, like Uber, finding a taxi, making use of the taxi through a map, getting pricing beforehand. You are able to rate the driver, and it tells you the time basis the traffic. Just like Airbnb, you can rate the host. You can get like people opt for non-smoking, smoking places, and so the value proposition is very strong and very marketable, and the company has a clear vision, and a distinct positioning. Even if they were not first to market, like a lot of companies had been trying this kind of stuff earlier as well, but they were the ones who hit it off. And in sometimes in the startup world, what we say is that a lot of time you are early. So I remember a lot of e-commerce companies used to come to me even before Amazon had entered India and Flipkart had become big. But they were early. Like India Mart is a company which had created an offline platform for B2B businesses, especially SME businesses, small and medium enterprises. But they were earlier in the game, and companies came after them and have gone on to become unicorns. And India Mart has also gone ahead with the flow, but that timing mismatch sometimes happens. It is sometimes beyond your reach. And always remember that investors usually don't fund ideas, they fund promising products and teams. So if they see the X factor in you, and they see the product, very promising product, they will go for it, and not necessarily you telling them that, in idea terms. And last is that your timeline, like, I will achieve unicorn status in 2 years. Sometimes it's good to be setting short term plans, medium term plans, but the timeline is less important than your ability to iterate quickly, to correct what is going wrong, to uh, pivot to new business models or changing realities. Just like, dot-com boom and bust happened, then Lehman crisis happened, then COVID happened. So if you are able to pivot to a different business model as per the changing market, and your ability to iterate quickly, that is a again it's a quality which will take you towards unicorn status.
Thank you, Tushar. That was an extensive explanation of things. Uh, I had two more questions to ask. So one first question is, when you were saying that there should be a demand in the market segment, but nowadays, since this Instagram and other social media channels have been so much imbibed in our daily life, that can it be possible that demand generation, can a business work on a demand generation side, and then people start using it, and then a successful business can emerge out of it? Have you seen any such kind of examples? What are your views?
Amit, I don't think anybody could have imagined what Steve Jobs created in an iPhone. The ability to use finger over a screen, having those apps and a separate app store, having wonderful UI and UX, and having a very neat looking thin phone in different colors. And so that kind of a vision not many people have. And companies, they spend millions in R&D, research and development, but they are always trying to find new products and services to which they can attract customers. What I feel about this is that legacy data, like how many people watch a movie in a cinema theater, and which kind of movies they watch, what is the length of the movie, and if we shorten the length, what is the reaction of the customers, how much they are willing to pay for a movie going experience. And how has the market changed in terms of accessing content? Is it now through movie theaters, or how is the TV and the smartphone impacting people's lives? And all these factors at some point in time would have led to someone creating Netflix, and saying that the whole this model of creating movies exclusively for the theaters will change. And it will change because people have moved towards tablets, towards TV, towards the smartphone, and those screens are capturing much more mind share. And once this realization would have panned in, then they would have thought of a Netflix, of creating content which is exclusively available through a platform like the smartphone or the tablet, and through an app, and charge basis subscription fee instead of one time fees. And actually, with the coming of software as a service, SaaS, the whole market has evolved from one time fees towards yearly or monthly subscription fees, and available on the cloud. So this also, I think, facilitated the creation of a company like Netflix. And I'm sure that all these data, some smart guys would have realized what this data was pointing out to. And uh, and you know uh, so I firmly believe that there are pointers which markets give uh, to the businesses, but not all businesses are able to catch on the changing themes in the market. It requires teams with high skill level, teams who have the I just love these 13 Amazon leadership principles, like customer obsession, like ownership of work, like invent and simplify, like you be right a lot. You should be right a lot of the times, and have like strong judgment and good instincts. Seek diverse perspectives, and learn and be curious. Hire and develop the best. Then another is insist on higher standards. Think big. Have a bias for action, not only for like discussing thoughts, and create a bold direction. Then frugality. Try to achieve in lesser uh, dollars what you want to achieve. So like this movie Gravity, which was a wonderful movie. The Indian space mission to Mars cost 88% less than what it took to make the movie Gravity, a real mission to Mars. So frugality. Then you should earn trust. Dive deep into a subject. Have a backbone to disagree, and change your opinions and recommit. And last, to deliver results. So all these Amazon principles, when I see, uh, and I talk to startup founders, and I do have lengthy talks with a lot of them, and I keep on telling them that these principles will take you a long way, and it's not for nothing that Amazon is the number one company in the world. And all these, I think, leadership principles will lead a company to pivot its model, to change its model, to iterate, to find the right secret sauce, and achieve a unicorn status.
Thanks, Tushar. I think you just gave out all the 13 principle without even looking at it. So yes, this was a very insightful and a very interesting and an extensive discussion about unicorns, how to build a $1 billion company. So last but not the least, any closing remarks from your side that you want to give before we end the show?
I would say that my initial talks with the companies were mostly from India region and South Asia region. But since the last 2 3 years, been primarily working more with Dubai, Singapore, Australia, US, UK, and places like that. And what I have seen is that the zeal to achieve a unicorn status is there across the world. And uh, the right markets, the right talent is available throughout the world. I would welcome anyone who wants to who needs help in their startup journey to create something beautiful and also make a lot of money in the process. If you need funding, if you need business advice, if you need anything related to valuation, financials, I am always available on LinkedIn, Tushar Kansal at Consultancy Ventures. And thanks, Amit, for calling me again to this show, and looking forward to many more.
Thank you, Tushar, for coming on to the show and discussing every single time, your wonderful insights. Inspires a lot of startup members out there in the society, and I hope the viewers have thoroughly enjoyed this show. And until next time, we will have a new topic, and we'll definitely welcome you again, and we can discuss another lot more many things. So until then, bye bye.
Thank you, Amit. Thanks a lot, Okan.